January 22nd, 2022. So 2 to 2202. And we're getting a day that is all red. It's so funny because everybody kind of knows that I am a Cantonese girl, superstitious. We believe in the numerology and stuff. And they were like, do you think today's going to be a very bullish day? And I was like, I really don't know how to think about it. It's such an insane and crazy market. I can definitely say that it'll be an interesting day. And you know, I'm watching these companies report earnings, and it's just amazing how strong some of the earnings reports are versus how crazy the market is behaving in contrast. But I do want to get into it a little bit here. Share screen. Let's see. All right. PMI came out this morning, slightly worse than expected. The purchasing managers holding off purchases relative to last year. I do have to go through this number a bit because I think like December versus January, you know what I mean? Like it's not, I need to make sure that this number isn't got some stuff hidden in it because I am not seeing that when I go through company by company and what their plans are. So we'll want to take a look at that. 55.5 was what was expected, and I'm seeing 50 something. I'm seeing the number come out at 57.5, which looks like it actually was stronger, but I'm seeing it reported as it was weaker. So we obviously need to do a little double check there and see what's going on. Consumer confidence also came out this morning, and I'm going to review that tomorrow a bit when I've had a chance to look through it fully. This morning, we had a lot of the energy companies come out, and I want to show you. A lot of folks are saying that this is war-related red screen today. You know, it's really funny that that's how it's being interpreted, because if it was truly war-related, we would expect to see the defense companies a lot stronger than they currently are. So that gives you a sense for what the financial community believes is actually happening versus what maybe is just reported in news media. Additionally, you would see this whole section green as heck, and it is not green. And there's really no good reason for the energy complex not to be green at this point. I'm going to show you that in a little bit. You've got crude oil up 2.12%, up 2% at $93. Now that to me is correct given what's going on. It does look like Germany is not going to put through NordStream 2 and approve the permits required to finish building it. I think that is going to piss off Putin in a big way. We shall see. But I think that there's a lot of propaganda going on. There's a lot of really craziness. I want to kind of show you a couple of things that I think are very relevant that have come out of these recent earnings reports as well. The first thing, again, remember our bullish call on the entirety of energy, but in particular the low-cost providers, has to do with this, which is this rush to renewable energy that is driving the price of oil and specifically nat gas up. And it's also, by the way, as much as the Sierra Club and all those beautiful people would love to pretend like this isn't true, it is also driving the usage of coal up, which is necessarily not good for the environment. As much as I want this world to be a greener place, I also want to find solutions to getting there that actually make sense. Williams, which is one of the pipelines that we have been bullish on, currently I believe it's kind of trading sideways in this market today. You know, at every given moment, I'm seeing a different pricing for everything. So things are up, things are down. Yeah, it's trading down slightly, but it was trading up when it first reported. It's dancing around these levels. And again, I think these pipelines are a beautiful place to be. But Williams, when it reported, really went through the economics of what actually is happening. And I think that it will take time for news media to come to terms with it. It will probably take time for President Biden to come to terms with it, quite frankly. And that might be the one reason why this isn't getting more coverage. But this is what it looks like. Emissions decline with nat gas usage. And it declines because nat gas is a cleaner form of energy than coal. And when you've got nat gas prices spiking because of this, which is basically this rush to like tax the gas companies in a particular way, and additionally this rush to ESG, which sometimes does not understand, depending on where you are, that investing in natural gas is actually cleaner because you will end up with less emissions than coal. These effects have a particular impact on the environment that is quite negative. And this is another chart that came out of the Williams call. It's actually more of an analyst day than it is their earnings call. And I encourage for those that really care either about the improving environmental conditions or alternatively about this area of investment. I think he did an amazing job on the investor call. I think it might even still be going on now. It is a longer piece, but have a look. Here he talks about how much coal is being used currently, which is way back here, and how much nat gas has the ability to replace that. And realizing too that nat gas is transportable, storable, et cetera, et cetera, et cetera. Something like wind technology and all of these other solar, et cetera. We're still learning how to transport that effectively. We're still learning how to store that effectively. That's why you can't just immediately go from 0 to 100 into green energy, because we don't have the infrastructure yet to support it. And quite frankly, think about it. The building of that infrastructure is energy intensive, right? Like people have to get out there and do it. So this is really why we are bullish this, and we believe that this whole energy complex is massively undervalued. Now, I additionally want to show you Apache came out. I really want to get you to see and understand what I'm talking about with these numbers. These are Apache's financials. It is trading down on earnings, which is crazy. This is what the revenue looks like for the quarter, okay? Not for the year, for the quarter, right? It went from 1.2 billion to 2.3 billion because 88% revenue growth year over year. And that is absolutely a scalable business. 382 million on the bottom line comes straight down, so you are getting operating margin expansion. And that is not happening because of some fancy math or something like that. Apache happened to have a lot offshore, so they also don't necessarily, the US Americans don't necessarily see the benefit of that because the way that taxation happens is a little different because it's offshore. But I just want you to understand that the price of oil has gone from $41 last year is what they were showing when they hedged it out. So this is their cost after hedging. Okay, it's $41. They got a $76 price after all of their hedging. Oil is now at 92. That huge economy of scale, economics, beautifulness does not incorporate where oil is moved to. And really just realize Egypt, North Sea, international, those prices are higher than their hedged out price. And guess what? It ain't changing. The reason it ain't changing is because of this conflict in the Ukraine, which quite frankly benefits the onshore because we're going to ship it over there because that's going to be where it is. Now look, here's nat gas, right? Nat gas from last quarter to this quarter, just look at how much more painful it is to be European right now. That's what all this is, okay? And along those lines, one of the hedges that I've suggested, it hasn't been the best hedge, but it is something to take note of, is VGK. VGK is the Vanguard FTSE European Index. Now, one of the reasons why I don't love this hedge is because some of the companies in here are really fantastic companies. It is a very small subset, but I'm just using this as an example. The place that really gets clobbered in all of this, that is not necessarily acting like it, for whatever reason, those Europeans love to short our markets. If I was confused, just look at what happens in the pre-market, because that's mostly Europeans and other countries shorting us, Americans. But quite frankly, they should short themselves, for God's sakes. They're about to have they're basically voting to keep these energy prices high for themselves by allowing this whole NATO, Ukraine, et cetera, to keep going. That's really what's happening if we're honest with each other. That's why the price of oil keeps staying where it's staying. Because, the thing is, as much as this Russia, Ukraine, whatever, Putin is the one that has the oil. So he can do whatever he wants, right? And he is, as I mentioned, let's just remember again who produces what, That's this slide over here. Oh, I haven't pulled it over yet. Okay, I'll bring it over next time. But Russia is a very large producer of energy, of oil, of nat gas. So this whole thing is really a crazy game that Europe's playing, because Europe, largely speaking, other than this North Sea, the Nordic countries, they're not really producing energy adequate to what they actually need to fuel. Now, they do have certain infrastructure things that allow them to use renewable energy sources, et cetera, but it just, to me, there's a silliness to all of this that's going on, but it persists. And also pretty much all of, if we look at FinViz again, pretty much all these guys are coming for sale for whatever reason that is crazy to me, because all of them, if there's any certainty or uncertainty in this marketplace, right here should not be where you feel uncertain. Okay, these guys are going to make money. That's really all there is to it. They're going to make money. They're going to return it to shareholders. All of them have said they're going to return it to shareholders. Most of them are going to do it via dividend plus share buyback. So this is really silliness to me, but it persists and it provides buying opportunities. And in general, the marketplace is providing a whole heck of a lot of buying opportunities. We continue to like the names that we like. We continue to short the names we short. Semiconductors as well. I'm seeing crazy news flow out of this about how there's supply or whatever, and that's why you want to kind of be short some of the semis, because they can't get, like, I don't think people understand. They are the supply chain. You know what I mean? If your issue is there's a supply chain issue, what do you think the semis do exactly? Where do you think that bottleneck is? Okay, so like this, to me, there's a silliness to what's going on in the news flow cycle, but I get it. It is what it is. Maybe you're understaffed. I don't know what it is, but that continues to persist. And, you know, it's providing opportunities to investors, in particular long-term investors, even more so than if you're in the options market. Now, the other one, too, that's a big opportunity. Oh, sorry. And a lot of people have asked me, hey, May, this Taiwan thing, blah, blah, blah. You know, I just want to remind you, I have talked about this before. Taiwan is the purple part here, right? So this is all designing and like creating the idea of what you want in the semi. This is all actually producing the semi, packaging it, assembling it, all that stuff. That happens mostly in Taiwan. Let's just call it what it is. And then also overseas. Very little. The blue, large, dark blue slice is us. And that's why we are doing this, which is giving... Ooh, sorry, I don't know why this little bucket, well, whatever. Anyway, $25 billion in grants. That's what is driving this, is because we are tired of trying to do some kind of conflict with China every time. They're like, well, you know what, if you're going to be that much of a jerk, here it is. Now, I really want to make it clear, because this, for whatever reason, is in the news media. It's psycho, because it's not true, right? They keep trying to pretend like the only reason China cares about Taiwan is these semiconductors. Let me tell you, that ain't true. All right. And to understand that, you really need to understand two things. You need to understand the history of China post World War II. You need to understand how Taiwan came into being. And you also need to understand what happened as relates to the end of World War II. Remember, China was an allied nation. It received the island of Formosa, now known as Taiwan, in that. And guess what? Taiwan is now not a part of China. So you can imagine that they're really pissed, because most of the CCP was part of the military that lost their lives, lost their friends, suffered through the Long March, all that stuff. So this is very personal for China to get Taiwan back, whereas for us, it's really just about this, to be honest. So just realize when you hear the news media talk silly nonsense, I don't know why, because it's simple. It's as simple as a Google to get that off of Wikipedia, because it used to be wrong in Wikipedia. Now, when I looked at it, it does appear to be the correct history and telling of what's going on. But just realize that that is a real thing for the Chinese government as to why they are so adamant about Taiwan. Yes, this is a nice thing, and this is definitely and surely important, but the bigger deal for them is they want Taiwan back, because they had a lot of blood that was lost during World War II. So that's where they're coming from. And it's not just World War II either. It's a much longer 5,000-year history that I'm not going to go through today on this call. BITO also coming for sale. Bitcoin. I mean, this is also true. So I think it's funny that you can have a concept, an idea that war is embroiled, but you don't have this thought process of all of the reserve currencies should be rallying, all the potential reserve currencies. So our argument on BITO as something that you want to just set and forget, long-term, 5 years, you know, don't even look at it. When it comes for sale, this one's one to take a look at as well. And that really has to do with the fact that the euro is something that's a little scary right now for nations to hold. SOFR is one of the issues associated with it. Potential conflict in Europe on the continent is also a reason, although I'm not necessarily believing that that's like, you know, I want to see how it actually plays out. And I'm not necessarily making calls on that right now at this minute, etc. Mosaic is going to report tonight with the call tomorrow. You know, it is, interestingly enough, CF, which is the only other fertilizer company in the S&P 500, proper fertilizer, they make nitrogen, is trading up today. Mosaic, I think people are just hedging in front of earnings, but In fairness, since the Chinese have subsequently announced that they will not be exporting either, there shouldn't be a difference in the dynamic there. And some of the last things I want to go through before we get to it. Google. One of my friends was asking me over the weekend, if I'm just going to set it and forget it, what should I set and forget for my children 5 years out, what have you? Again, this is a good time for us to review past performance is not indicative of future returns. There is an entertainment aspect to what we're doing here, but at the same time, if you were to research Google at 22 times forward PE for a stock that consistently grows 30+% in earnings, top line and bottom line, this is probably the cheapest Google has been for some time. Google, if you're going to do it, you want the A shares, which is typically going to be Google L. Make sure, double check with your broker dealer. One has voting rights, the A shares, the C shares do not. So if you have a preference between the two, have yourself a look. If you're in the options market, I would just go farther back because this market has lost its mind a bit, either farther back on your expiration to give it time to be what would be closer to fair value at 30 times, at a 30 multiple. Which you can see historically is typically where it trades. But at 22 times, actually Google may be one of the better buys that's coming up in this marketplace because this is stupid. There's no impact to Google on any of the things that are causing volatility in the marketplace. And with that, I will pause and take questions. Any other questions?
Hey, May, brilliant. Okay. Do you think Facebook, Meta, their advertising revenue is being affected by this, the new privacy laws? Do you think that affects Google at all?
Ultimately, no. I mean, yes, I'm going to say yes but I don't think it's going to be, look, I mean, this thing is trading at a 22 multiple, right? Advertising revenue is a huge component, but remember, it's not just the United States that Google takes revenue from. And Google definitely has pricing power. Where else are you going to advertise? Like, I mean, where else are you going to go? You know what I mean? What exactly is it that people think is going to happen if there's any kind, like, that cost is going to get slipped right on over to the advertiser, right?
Yeah, it's just down in sentiment with the market, and Facebook is really good.
It really is. It's big cap just getting sold off. There is this weird thought process that what is it? That we're going to move from value to growth or something. But at 22 times, it turns out Google's value, right? Like if you're trading at a 10-point discount to your growth rate, you're trading at 80% growth or 60%. Wait, sorry, my math is terrible today for some reason. So it's 80% growth, right? Because 22, 35. Yeah, you're trading at like 60%. I don't want to say. Anyways, you're trading a huge discount to growth. I don't know why I can't do the simple math in my head today, but you are actually value at this point. Your value at your growth at a reasonable price. So okay, so like if you're gonna say you get 1 point of margin compression as Google like allows itself to program very quickly for the long term. It has to spend maybe like one little percent of like 1% margin would be huge, by the way, for a company like Google. But you're still at such a discount to your growth rate. Like it's silly.
Yeah, I've heard that.
Alphabet, it's called Alphabet now for a reason. It's called Alphabet because it basically is splitting itself up into the various components of what it's also doing in EV, quite frankly, in data collection associated with your vehicles, all the other business sub-businesses. I mean, yes, the core business is still the core business, and that kind of is what it is. It's cheap, though.
Yeah, I like your take on how, I mean, I heard it going around that higher interest rates hurts big tech.
I mean,
that's not really true, right?
Depends. I mean, it really depends. A lot of them have losses that they can take off against it. Some of them just make so much damn money, it's not going to make a difference. Do you know what I mean? Like, it's 22 times. I don't know another way to say it. Like it's trading at a 20. It's trading at a 22 multiple. Like you went like that. We ran past that flagpole already. Do you know what I mean?
Yeah. I was just saying that the market in
Yeah.
general, it
Yeah.
says higher interest rates hurts big tech. I don't, but you,
Higher
I mean,
interest rates? Oh, sorry. I thought you said higher taxes.
no,
Higher interest rates does not hurt big tech. Big tech does not finance itself with debt. Period. Like, higher interest rates hurts small and medium sized businesses. It may potentially hurt, quite frankly, the staples, which keep having a life of their own, and any other industrial company that actually issues debt as the primary source of funding. But it turns out it does not hurt big cap tech at all. Like it does. If anything, big cap tech, if it issued debt, would still potentially have people buying that debt at a discount. Now, the one big caveat to that is Amazon, because Amazon's cash flows look like shit. But sorry, watch my language on that. But like, you know how I feel. I've been very clear on how I feel about Amazon. It's really interesting because I do think that like these ubiquitous large statements, I really wonder, in a world where you just have a lot of people that are getting a lot smarter about finance, I wonder if media is going to still be allowed to get away with these broad statements that are made by people that do zero research. I mean, one of the things that I just want to talk about that has driven me crazy, is part of the reason why I do this, is I know for fact, not even confused by this, that AI did one thing in media to help with financial news flow, and that is they basically created these algorithms that create news stories. So, and you can see it, like when you look at these Yahoo Finance stories that are written by Zach's estimates or whatever, you can tell that Zach has no clue what he's reading. Do you know what I mean? It's literally like a pull from a data feed that feeds these stories, and then there's a bunch of words that are added, most of which these days don't even make any kind of sense because the financials have gotten more complicated for large cap. And I don't know how much longer that can persist in a world where you have Reddit and you have places where people do actually do research. But until then, you get these broad statements that make absolutely no sense all the time.
Yeah, that's very important. If people are reading that, they're getting misinformed.
Totally. It's crazy how it's like, like I had someone ask me the other day, like, May, don't you think with PayPal down 40%, it's time to buy PayPal? I'm like, do I think that there could be a dead cat bounce? There can always be a dead cat bounce within shorts. But do I think that PayPal deserves to trade at a 20-something multiple when it has margin compression? No, I do not think it does. There are too many other companies that are a better use of your capital. And also there are other companies, even like, as much as I'm just going to be honest, I'm short Facebook right now, but I'm a nervous short. Like, I'm happy to cover it and trade around it because Facebook, at least their margin compression, I know what they're doing with that cash. They're trying to fuel something new that's happening. Do I know what that new capital is? Like, do I know what the revenue is? Do I know what the earnings are of this funding of the metaverse is going to be? I don't. That's why I'm a nervous short with Facebook, because I could be like, Facebook could be overestimating or they could be massively underestimating. So, but with PayPal, I hear nothing of how they're going to ever get those that margin compression to stop. Do you know what I mean? I hear nothing. Yeah. There are some things that they've done that could be places, but I need to see a lot more. Like one of the places they could potentially get those margins up is what they were originally doing in crypto, because they charge crazy fees when you buy Bitcoin or whatever it is through them, as does Coinbase, as does everybody else. But the one thing they have that Coinbase and other things don't have is that they are a little bit more trusted than a Coinbase or whatever. Do you know what I mean? Like, and but also you can't actually trade Bitcoin on, you can only buy or sell. You cannot hedge, you cannot this, you cannot that, right? So it's an imperfect business that they would potentially need to buy other assets for. If they told me that was what they were doing, I might stop shorting them because at least I know where we would see margin expansion coming from. Thus far, I've heard donut about how margin expansion is going to actually happen. If anything, it looks like mostly margin compression is going to continue to happen because they keep getting increased volumes and the revenues are low teens versus an industry that doesn't have low teens growth, right? Visa, MasterCard are not low teen revenue growth. And yeah, so PayPal, I don't get it. I don't see it. I don't understand it. He needs to articulate it more clearly. Facebook, I do kind of get it. I just don't understand the economics of it. Viacom, I totally get it. I don't yet understand the economics because he didn't do a good job explaining the economics of it, right? With Facebook, the one thing that will always give me pause to why I'm not willing to be as aggressively vocal on a short with it is because when I look at my nieces, my tweens, as much as I love my niece and I know she loves me back, but the fact is I'm losing her to the metaverse every day. Do you know what I mean? So if I was confused that the world is going virtual and that's going to suck up more hours of my day versus in real life, I need only look at literally any person that is a tween or teenager to know that that's true. I mean, I know, like who doesn't have a teenager that is literally ignoring them, not because they're playing with their friends and physically not in your house, but they're like physically sitting there in the metaverse. It is ridiculous. And yeah, that's kind of what
Metaverse being, you mean playing games?
Roblox, using the
Right.
Oculus, et cetera, et cetera, et cetera. All of that is the metaverse. Even the Zoom call technically is the metaverse. There are settings that Zoom is already creating so that I can see a conference table with different faces if I wanted to. Now, that is largely speaking a bit useless, but where they're trying to set up the technology for is the day when we all actually put on our Oculus and, like in your classic sci-fi show, are staring at each other's face, moving in a certain way. Now, that extreme version, that technology is probably for the United States 5 to 10 years out, but for other countries, it is not. Let me tell you, in China right now, I was just showing some of my friends for some of the videos that I record, I actually use Chinese face correction software for that, which is readily available. It's actually free, okay? It's an app, right? But like that software absolutely can correct and make my face perfect real time and record it however I want to adjust it. That technology 100% exists. They use it across all of the media platforms in China because it is a scaled way to do editing, video editing. So the idea that this technology doesn't already exist on the planet Earth, total BS. The idea that it may not exist in a commercial manner in the United States, that's 100% true depending on which technology precisely you're talking about.
Right. Well, Roblox, it's gone from 141 to 47. And
Yeah,
I
I know.
own it.
I owe everybody in the world some more research on Roblox because I definitely have to take
Well,
a
no,
look at it.
I'm just saying it's just showing us that, or showing everybody that this metaverse may be further off than you think. And
Further off?
Facebook further off. Yeah.
You mean it's
Like Facebook, I
further in
mean,
the future?
their 90% of their revenue is advertising. So
Yes, that's true.
they're going to replenish that with the metaverse advertising, right?
Oh, kind of, I want to say, like, I think what they're doing. So remember, their revenues grew at 20%. This is very different from something like a PayPal, which, I'm not a fan of right now. There's a few other companies that I'm not a fan of, but I know PayPal is more controversial, so I bring that front and center. PayPal's revenues grew at 13%, and that's despite a ton of acquisitions. Facebook isn't doing quite as many acquisitions. They grew top line at 20%. What they did was they redirected capital to the growth of their firm via headcount additions to try to grow the metaverse. They're very different stories and very different reasons why you'd be short them. But the metaverse for them is just expand. So if you think of Facebook as a media company versus thinking of it as an advertising company, because Facebook does produce a lot of content, right? Or is a content platform, let's call it that way, right? So it is competing as much as anything else for eyeballs from, Netflix, et cetera. I think these divisions of where they put companies these days are a little bit odd, but we'll go with it, whatever. So what they talked about was the fact that Instagram short form content was having difficulty competing with TikTok short form content. Facebook also has short and long form content. And what it really wanted to do was continue to drive more short form content to improve the stories aspect of Instagram, but also, implied within that is some of the things that they're also caring about longer term. That was more this quarter, but longer time frame when he came out and really discussed where he's trying to go with the metaverse. You have to kind of mix all of these things together. But you can see that. I mean, like, it's not like anything I'm saying is so phenomenally brilliant. Like, this is stuff that is Googleable, and the young people talk about it all the time. The younger than us people will call it like that. Talk about it all the time, and all the new features and releases. It's not so much rocket science where they're trying to go with it.
So, I mean, but how do they monetize it? I mean, how do they monetize it over the next quarter, next year?
Well, all of it's just advertising. I mean, all of it's advertising, building new mouse traps to capture me, and my eyeball share is always been the whole thing of media at all times, right? Like if you get my time, you get the ability to advertise with me, even if it's a small little blip on the screen. It could be like any number of things, you know, like as long as you capture my time, you have the ability to monetize advertising. And so all it's really doing
and I've heard it. All you need is 15 seconds. So you see metaverse in the next year, say with Facebook, establishing an advertising venue on the metaverse. Is that right?
Okay, let's actually, I would just want to make sure it's clear because maybe it's the way I'm talking about it. Remember, advertising for a full blown out large company like an Omicron, advertising isn't just me selling ads, right? It's also affiliate revenue, product placement, et cetera, blah, blah, blah. So literally the amount, it's also the sale of data associated with proclivities. You know, it's really anything can be like advertising revenue is not a single, like I'm buying an advertisement, right? It's really evolved into something much bigger than maybe what traditional advertising was. So if you're considering, if a person is thinking about Facebook and they're only thinking about click-throughs, then they've kind of missed the dialogue of what's transformed within advertising by a lot. Instead, what am I doing? Where am I spending my time? How many minutes am I spending my time on this particular form of media? Like if we use something that's a little bit more neutral for a lot of us that are subscribers, because I know I met quite a lot of my subscribers on Clubhouse. The beautiful thing about Clubhouse is if you think about from a data perspective, what Clubhouse has done is it's actually able to easily capture how many minutes I'm staying in a room. And as you'll notice, some of the things they've added, which is the tagging of room for what are we talking about, right? So that tells you a little bit about what types of media would actually attract my eyeballs. Like if you wanted to talk to me, what are the things that you're going to need to talk about if you're going to get my attention? Heck, even dating websites have the ability to, you know what I mean? Like for a certain set of the population, that type of thing is really valuable. I mean, just think about what it actually is. That is what Facebook is hoping to continue to monetize, as much as like actually selling directly some sort of ad placement on the screen. That's why it's all about, that's why it's that's why it's always been about eyeballs, always. Now, for something like a Netflix or for something like a Viacom or something like that, well, Viacom's a little different because it's got a few different businesses. But even so, the ad, like, interestingly, during the coronavirus period, when we were in the thick of it, one of the areas that actually increased in revenue versus decreased. So yes, there was ever so slightly less ad spend, but one of the places that really ticked up was affiliate, meaning like product placement in the actual media itself. So XYZ really famous person in the film is drinking a Coca-Cola, stuff like that, right? So all of that increases as the consumption of media increases as well. You just have, so it's not, now, I'm saying all of this so that we can more clearly define what I mean by advertising revenue or what I mean by marketing revenue. But like I said, one of the things that gives me pause for why I am currently short Facebook, but nervously so, is that I don't know what this metaverse future will look like and how that revenue actually goes. Is it a much bigger number than what I understand because I am one human being who cannot possibly know all things? Or is it a much smaller number like the market is currently describing is happening as it's clobbering Facebook? The thing that would give me pause to thinking it's too low of a number is that Facebook still managed, despite everything it's saying was sucky in the quarter, to grow revenue at 20%, right? It's not a small number to grow your revenue at when you're the size of Facebook.
Yeah, that's important.
Yeah.
So you're saying the metaverse could be much bigger than this click-through ad revenue because big companies like
Yeah.
Coca-Cola could pay
Yes.
a lot more than a smaller company could pay.
Yeah.
Or it's going to pay.
Yeah.
I get it.
It can be. It can be because especially if it also incorporates like, you know, some understanding of who you're talking. Like there's just like, you know, data. It is like advertising. Another way to think about advertising in general is it is a pure play on data. You know, if you watch old episodes of Mad Men, there is this one episode late in the season where they start doing statistics on consumers to try to use that. And it was really controversial at the time that Mad Men was shot. I thought it was such an interesting clip. I almost wanted to cut it out because, you know, I'm also teaching a class on data science. I almost wanted to cut it out for my students to really appreciate, you know, there is like that whole industry. Yes, it still does some of the traditional things a la Mad Men of like fantasticness and great content, that sort of thing, to capture the eye and come up with these gimmicks. But you better believe that that industry has very much so transformed into a data-driven industry in all possible ways. And if we think about this larger scale transformation of data, it's very hard to know how it will all be monetized. 100%. There's smarter people than me out there, and what that actually ends up looking like revenue to earnings. But, you know, if you're not thinking about it that way, then you might be slightly off and why this whole thing is kind of important. I think you are. I know you're playing devil's advocate to me too, so I'll be harsh on you.
Well, thank you very much. Yeah, I get it. No, I mean, I see Facebook going down, you know, to 140, 150. So, but that's
so you're really,
technical.
yeah. I mean, timing is everything. Like I said, I am not short Facebook right now because there's too many unknowns. And given what it's going to be doing in the next year, you know, there is every possibility the valuation is correct. So there's just a big, like, I don't know the answer to it. Whereas, but like I said, for a different, I'm nervous when I'm short Facebook, whereas I am not nervous in the same kind of way. Now, I mean, look, you know, the market can do whatever the market can do, you know what I mean? And will do whatever, it doesn't really care what I think. But if you're asking like, what is it that the fundamentals are saying, you know, it's a different story.
Cool. Okay. Brilliant, May, as usual. Thank you.
I appreciate it. Okay, so maybe we can end it. You know, we're coming more or less out of earnings season now, and so we will enter this kind of weird traders environment. We've got some of the traders environment today. Realize though, this next week there's only one day in the month, so my suspicion is that this week will trade really crazy. And there's every possibility that the market just decides that it doesn't want the S&P to be down this month, which has happened before last year. We saw a lot of that. Generally speaking, I still argue that most of the companies in the S&P 500 are actually doing quite well. So, I mean, with great differentiation between winners and losers, more so than any other quarter since this COVID began. So I think that's kind of where we'll start to go to as we exit this quarter and people start to set up for the following quarter. That would be the last thing I would mention. And with that, I'll close it off for today. Take care, guys. See you tomorrow.